Since 2017-18, the union budget has stopped being an event for those indirect taxes which have been subsumed in the goods and services tax. While the budget can still tweak are custom tariffs and excise duties on petrol and diesel, besides alcohol used in medicines and other sundry items. Of these, the government has already been altering excise duty on petrol and diesel outside of the budget. Last year, it introduced agriculture, infrastructure and development cess on these two fuels, but neutralized it by proportionately reducing basic excise duty and special additional excise duty, leaving customers unaffected. So mainly, it is the customs duty which the budget has yet for tweaking, and the government has been doing so ever since the Atmanirbhar Bharat plan was announced, reducing import duties on raw materials and raising it on products which could be made in India. The process is expected to continue in Budget 2022 as well. However, the government is also negotiating free trade agreements with countries and blocs. While duty tweaks there will be for these countries and blocs and may be done outside of the budget, the government may announce some alteration to custom duties on those products for other countries in the budget.
While the union budget per se may not have much to do with GST because the decisions of GST are taken by GST Council when required from time to time, it is expected to provide some directional clarity on what we can expect on GST in the fifth year of GST. The major changes that are expected are in respect of customs duty. On customs duties, we have seen a movement to Atmanirbhar Bharat recently, which may require that the import duties on certain items be tweaked, keeping in mind the interest of the domestic producers. However, we have to be careful enough to ensure that the inputs which are required for domestic manufacturing are not subjected to higher customs duty.
As India negotiates FTAs with countries and regions mentioned earlier, there has been the demand that goods produced in SEZs should also be treated as coming from the countries with which we have these agreements. In other words, there should not be any import duty from goods produced in SEZs and sold in the domestic tariff area.
From 2018 to 2021, numerous SEZ have been denotified because they were not able to get a proper response from the industries. One key area is whereby SEZ is not able to freely sell and market those goods in the mainland of India. If a person has two options, whether he has to import goods from SEZ which will be liable to custom duties, or he has to import such goods from countries like Bhutan and Nepal, Afghanistan, whereby we have a free trade agreements on which there are no import duties, then the person will like to import such goods from these countries. We should ideally give the same status to SEZ which we have given to our FTAs, meaning thereby anything that is produced in SEZ could be brought to the mainland India or domestic tariff area without charge of any customs duty.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.